Alright everybody, what's going on? Hope you're all having a fantastic week so far. Welcome back to another market breakdown. In this video, not only am I going to give you a market outlook, but I'm also going to give you a little lecture when it comes to identifying good market conditions, bad market conditions, how to identify them, and also how to take advantage to the fullest of the good market conditions. Because let me just remind you, when it comes to becoming a profitable trader, it's not just only about being somebody who can trade every single day. In fact, there's nothing to do with it. It's not about taking a trade every single day with the highest risk to reward, with the highest win rate, although that would be the most ideal trader. But this is not what the most profitable traders are doing. The most profitable traders are simply trading when the opportunity arises, and the opportunity arises in a good market condition. A good market condition is something which that trader has already reviewed multiple times in the past with their backtesting data, their journal data, and simply they deem that as a good market environment, right? And this will be subjective to every trader out there, but once this setup is presented, that's when they go ahead and take full advantage of that by putting a good amount of risk behind their trade ideas because they're so confident in this. And that confidence comes from where? That confidence comes from them journaling and reviewing and basically studying the data that they've had of months and months and months, or years and years and years of real experience in those environments, right? So it's not only about just taking those high risk reward trades and with high win rate and very frequent trades. In fact, it's almost the exact opposite. It's about identifying, like a sniper, those trading opportunities and taking advantage of them and staying out and literally sitting on your hands in the environments where the market isn't so good and it doesn't actually align with your strategy, right? Because it does, at the end of the day, just take one bad trade, right, or one impulsive emotion to literally ruin your whole trading portfolio. Like, let's be honest, if you're trading with real capital on a $100,000 account, for example, right? For example, if you put in, if you over leverage and you revenge trade and you just, blow up during certain market conditions, as you can see right here, then what you're going to be left with is a blown account, right? So what it's really about is just understanding where you perform the best. Now, this will be different for everyone. In my case, in my scenarios, I tend to be trading the best in daily and 4-hour consolidations, but lower time frame, like 15-minute, 5-minute, 1 hour trending environments. When I can spot this, that's where I usually tend to trade the best. However, when the daily and the 4-hour are trending and moving in a fast manner, I don't really like to trade in those environments. It's not that I'm a bad trader in those environments, it's the fact that sometimes I've been waiting for a deeper pullback or I've been getting in prematurely, things like this that have been led to more and more losses. So simply I just wait and sit on my hands when the opportunity arises. Remember, in the battlefield, if you want to put an analogy to it, the soldiers on the front line, on the machine guns, things like that, they'll be spraying hundreds or thousands of bullets, right, and getting a low amount of kills on the battlefield. Whereas a sniper is someone who just takes their time and actually gets the most kills on the battlefield because they're the ones that can identify exactly where the opportunity is and they can take action on those ones. That's what you need to be, right? And the cost of that is maybe you having to drop your ego, because on social media you're going to be seeing thousands of traders taking a trade every single day, making hundreds of thousands. More times than not, a lot of these traders are fake, either trading on demo accounts, even challenge accounts, right? They're showing this off. And overall, if that was the case and they were making this much money consistently every single day so frequently, they'd be multimillionaires by now. So remember, that's another thing to keep in the back of your mind, which is overall just to stay in your own lane, focus on yourself, and remember, it's you versus you, and that's the only competition you should be focusing on. Now, before I get into this analogy that I've got here, where I've got Monday, the whole of the price action of the previous week, if you guys are interested in actually automating your trading, passing these FTMO challenges and trading on the live funded stage completely hands-free. Remember, as I've mentioned in the previous video, the automation systems that me and my team have been working on over at Funded Fast, we've actually been improving that day in, day out, and we've been getting multiple case studies. Before we launch, we want to actually open the space up for a couple more, so make sure you guys join the group for that. We've had tons of amazing testimonials, people getting payouts. In fact, we have some right here where they just came in literally yesterday, and I'm going to be posting these in the chat as well. As you can see, a few FTMO payouts right here, and this will be all published, again, all verified, all public. And this is something where I've actually implemented my own gold strategy into this system, and then across other pairs as well, because gold is now all-time highs. We are going to make a few compromises for this and start applying this strategy onto other pairs, and people have been absolutely killing it, right? So go ahead, if you're interested, join the Funded Fast EA channel, and we may be opening a few early access seats before the main public launch, because we do want to gather a few more testimonials, a few more case studies, and want to work on a few more students currently right now. So if you are interested, go ahead and join that channel. But for now, let's get straight back into this breakdown. And also, let me just go ahead quickly show you the if you guys haven't seen already, the actual testimonials, all of the information is right here, tons and tons of it. We're going to be posting there every single day. But without further ado, let's get straight back into this market analysis. So anyway, this is the price action from last week. If you guys haven't noticed this already, this was gold's price action from Monday all the way through to Friday. I want you to have just one job right now over the next 5 seconds. You tell me which market condition or which day out of all these days over here would you decide to trade, right? Have a think about it if this has been on the screen for long enough. And for me, in my scenario, I would simply choose Monday and I will choose Friday. The beauty of this right now that I've actually outlined here is the fact of how similar Monday's price action is with Friday's, right? Just look at how crazy this is, right? What we see here is almost identical price action, right? And I know a lot of traders in my own academy who took advantage of the trades on Friday instead of Monday, and the other way around. And some people took advantage of completely both. And I know a couple of traders who actually took a few trades over on my Instagram, DMing me, who have taken trades in the middle of the week. And for me, the middle of the week just was not at all, super clean enough. Like if we just attach this Monday to the Tuesday's price action, what you're going to see here is the market, I'll go over the Monday's price action in a second, but what we can see here is the fact that Tuesday over through to Thursday just didn't have that same sort of price action, apart from, I think this must have been Wednesday right over here, but this was very slow, low volume, low time frame structure. Apart from these little higher highs and higher lows, there wasn't much we could do about this, apart from as well, you could argue this reaction to the structure, because let me just outline this for you. The market simply made this double bottom here on gold, then it made a higher high, and I know a lot of people will be thinking, okay, this is a higher high, where's the next higher low? That's the thing I'm talking about. This higher low didn't come in, it was a shallow higher low, right? And over here, this would be incorrect for me to do, because right here I'm marking out minor structure as opposed to major structure. So we can identify this as a double bottom, the market made a higher high. Notice how each move is roughly the same in value. And then the market came back and it actually tested a previous piece of structure right here, which was the double bottom's previous high, right? So the market made a double bottom, previous resistance got broken, market came back, retraced into a level of support, and then from here it really took off and it made the high of Friday. Overall for me, if I was going to trade, Wednesday or Thursday, what I would have been looking for in this price range over here would have been somewhat of a pullback from this last leg of structure, which was the double bottom, to this high over here. Notice the market just really retraced into a previous level of structure over here, which wasn't the cleanest. For me, I don't like to really take trades off, previous structure pieces as much as I do like taking trades off premium levels like the Fibonacci, right? So discounted ranges, prices where the market's going to be there for a short amount of time and then trade away from that. This over here just wasn't the right type of price action. Instead, and on top of that, the volume that we were presented with on Tuesday all the way through to Thursday just was not, something I would work with. Not only was there low volume, but as you can see, each pullback only on Wednesday was working within maybe a 5-minute time frame that was super small in value, and even then they didn't really pull back deep enough for me to consider them a real pullback. So that's where, as you can see, the market came back, took out these traders over here, and then continued to the upside. Now it goes over to Friday, and I want you guys to just understand that, again, we want to simply buy low and sell high, right? I'm going to try and keep this video short and simple and concise, not too short, but also to give you guys the understanding that the basics of trading at the end of the day, no matter what any other mentor tells you, is buying low and selling high. When we have seen a rally in price action from this previous low without any real deep pullback, right? In terms of, when I say deep pullback, I'm not seeing the market break the initial high, right? And then almost instantly come back, not just retest it, but build some sort of liquidity, take the liquidity like it did on previous days, and then continue to the upside. Instead, the market was just, ranging, and it just slowly pushed up to very high values, which is what the Friday's price action continued from, which I'll show you guys in a second. It basically looked like this, right? After this point, the market on Friday hit a resistance, just like it did on Monday, okay? And then the market presented what? A low, a lower high, and then a lower low. Once it did this, this was a clear opportunity for you to go for a sell right over here. Now, you could have either gone for a sell there at the most conservative level, or you could have assumed that, okay, the market just gave us a news candle to the upside, came into resistance right now, and it would only make sense for the market at this point here, which I will show you on the actual price action chart, the level of resistance, and why it does make sense for the market to now give us somewhat of a pullback. Because again, if you want to think of it in analogy, as an analogy, the market's, every time it's moving in terms of structure, high highs and higher lows. High highs and higher lows are just another way of saying, in a way, you're having a sprint, then you're having a cool down or a walk, and then you're having a sprint, then you're having a cool down or a walk, and then you're having a sprint again. That there is like, although that might not be presented every single day, on the days it does present, that's what I want to take action on. It's as simple as that. And where was this type of price action presented? On Monday, on Friday, right? Not to the upside, but to the downside. So that is basically what a good market environment is. And how do you identify that? Well, the secret to this, and I will be explaining this in more depth in a full YouTube video, but is when you see the market with low volume or low, just volatility for a few days, that's when the following day after that, or a couple of days after that, is when you'll notice from just past experience, maybe you guys already know this, but you'll notice that the market then presents, very clean opportunities after it's had low volume or low volatility and just not clean structure where the market was presenting clean order flow. It might not be the exact day after, but what I have noticed is with specific pairs like gold and majors like GU, NQ even, and also I think it is GBP, JPY, in the week, I have noticed that it gives you at least two very good golden opportunities. Again, this is subjective to you as a trader and what time frames you like to trade on and what market conditions you like to trade on. But for me, as you can see, Monday was a beautiful top opportunity to trade, and so was Friday. So moving on to the actual chart, you guys will see what I mean by Friday's price action. So ignore the lines for a second, but this right here is pure art, right? I'm going to go up and explain this in full depth for you right now. So what we can see is Friday's price action, and then we can see Monday's price action right here. So again, look at Monday's price action. Notice how the market came into a level of resistance. Notice how it came to a level of resistance, printed a double top in some sort of manner, lower low, lower high. That's where I got in and closed out here. The market then made a lower low compared to this previous high, then made a lower high, sorry, this high right here, pulled back into a Fibonacci zone and also a level of resistance, and then absolutely tanked during New York. Now let's go ahead and compare this over to Friday's price action, right? And even Monday, right, when the market opened. I'll go over this in full depth right now. So you can see over here the market, after it made a, I think it's CPI or something, let me have a check. Okay, so core inflation rate, things like this. The market had an absolute boom to the upside, shallow pullback again, and then a rally to the upside into this level of resistance. If we look at the 15-minute time frame or the 30-minute, in fact 30-minute might show a bit clearer. Let's just zoom out. 30-minute I think is what I was using for this. But yeah, you can see over here 30-minute, 15-minute, pretty much the same. But what we could see here was the market rallied to the upside, and then it made a quick, deep pullback, not deep, sorry, pullback, but a more impulsive pullback to the downside. The 5-minute I think presented this a little bit more clearly, so you can see that there. Okay, it wasn't insanely impulsive, but what you could go for was an aggressive sell right here, right? And I know a lot of people that went for this because this is again during late Asian session, sorry, late New York session, but the market pulled to the downside, built up a little level of liquidity. If you look intricately, you will see a clear double top being presented right at a discounted level. When I say discounted and premium, I don't really know the proper difference, but what I mean here is it's at an expensive price right here, and sorry, at a cheap price over here, but this is at an expensive price right over here. Okay, so very simply we have a nice 61.8% retracement in line with our resistance level at 2417.5, and the market actually built some liquidity right around here. Okay, you can see the double top right there. It purged that liquidity, grabbed the liquidity, and it actually made a 5-minute engulfing with a rejection, combining that with price action systems right here, with our price action entry signal, sorry. You can see that 15-minute rejection, and on the 30-minute time frame you will see an even clearer engulfing candle right after the rejection candle. So that rejection candle was a clear conservative opportunity for you to enter. Put your stop loss above these body highs, or for a very conservative opportunity, you could go for a 70 pip stop loss, which would have been a bit extra for me, but for me around 30 to 50 pips is what I'm usually looking at. And you can see right there these body highs being the nice of rejection area and also covering that Fibonacci zone. And then we have the market absolutely tanking in our favor, right? Not only that, but once the market did push to the downside, it then made a lower high and it maintained this lower high. So at this point you had 1, 2 lower highs, and then a drop to the downside, making a clean lower low, then a lower high coming straight back into this level of previous support and retesting it as a minor level of resistance. So if we go ahead and just analyze that really quick, you can see just this kind of structure piece right there, the market making a low, making a high, coming back here, retesting it, and then eventually breaking it. Once the market broke that, it came back and retested this area of intraday support, retesting it as resistance, printing a rejection candle, and then for the remainder of the session, it actually pushed right down into our level of support, which was right over here, for a clean 1 to 3.8 and also a clean 1 to 2, right? That would have been on the second entry based on the lower high, right? They would have both been very, very good entries to take. One or the other you could have taken and they would have been perfectly fine. Then you can notice that the market actually continued to make a lower low on the 15-minute, made a lower high, and then more news came out. To be honest, realistically, you could have been out at this position right here. How could you have caught these buys over here? Don't forget, whenever you're looking into the smaller time frames, you don't want to be too sucked into this, right? Because that was clear 15 and 5-minute analysis right there. And we didn't look at the higher time frame, like the 1 hour. So how would we have expected or anticipated this to be a buying opportunity, right? And that would have been very simply, and these are not trades that I took, these are paper trades, and these were trades that I showed to my academy members, explaining to them in full depth how this was so beautiful and how this was able to be taken. And again, I didn't take this because I was locked in payouts for my FTMO accounts and Funded Peaks account. FTMO will be taken this Friday or Thursday, and Funded Peaks next week, next Tuesday. So again, what we did there was we analyzed smaller time frame and we caught the sells over here to the downside, right? Because the market came into a level of resistance on the higher time frame. It needed a pullback, but don't lose track of the higher time frame bias, right? As you can tell on the 30-minute or the 1 hour, the market had made that significant move from the downside to the upside, okay? And if we look at the structure over here, let's just have a look back, arrows, right? The market actually made a push to the upside, made a higher low, and then it actually made a higher high to the upside right over here, right? I'm not going to include this little minor structure, although that was the last push. I'm going to keep things relative in size. And then you can see so again, look, impulsive move to the upside, corrective price action to the downside. Price action is literally it's just another version of writing a story. Okay, it's literally just another version of writing a story. Instead of writing it in letters, is doing it in a little picture format of literally candlesticks. And what can we see here? This was by far one of the cleanest Fibonacci longs you could have taken of all time, and this was a clean 61.8 retracement into a support zone at 2390.5. And again, what time did this happen at? This happened at exactly New York session. My podcast will be coming out, and you would have seen that, or even not in my podcast, in my previous YouTube videos, I've told you about the high probability liquidity times, right? And 1:30 p.m. UK time, which is half an hour after New York open, that's one of the most beautiful times to take advantage of the market, because you will see liquidity grabs, you'll see liquidity runs, sweeps, whatever you want to call them. You'll see taps into, areas of fair value gaps, discounted areas, and it'll all happen in a fast manner. So that's where you need to be fast on the trigger, take advantage of this, and again, you will reap the rewards of the market giving you those profits quicker rather than later and delayed. So again, you can see this push to the upside. The market built some liquidity in a corrective manner, came to the downside, took out every trader who'd maybe bought along this push to the upside, and actually went ahead and gave a wick entry opportunity, stop loss below the support zone, and that would have been your clean entry. And you guys have seen me catch these entries multiple times. And overall, again, let's just don't go over the fact that the market gave us an impulsive move to the upside, indicating its momentum and the direction it wants to go for the day, and then printed a series of lower lows and lower highs, right? And then made this last lower low, and then eventually the market environment changed. A nice impulsive higher high was then made, right, compared to these multiple minor levels of structure. And although yes, it did stop at this level of resistance, it still was a clear opportunity for you to continue going for buys. The trend is your friend until otherwise. And in this opportunity right here, you could have gone for an aggressive Fibonacci long for another scaling. Although this wasn't a confirmed trade, it just was another level of a complex pullback. And I will go over this for my academy members. I've gone over this in the course multiple times. And you can see over here, although it didn't break this higher time frame structure, it most definitely broke these multiple highs over here on the smaller time frame, indicating that you could go for an aggressive opportunity to go for a trade right here. It built liquidity again, had a shallow move away from there, came back in, tapped into this order block. And one thing I forgot to mention, we did have this massive fair value during news, and actually 50% of this move right here. Notice how I'm combining these other, you can say, institutional, ideas, and actually combining them with price action, support, and resistance. There's no one way to go about the markets. It's whatever makes sense to you. And this all made sense to me. Notice how I'm combining multiple things: support levels, timing of New York session, Fibonacci zones, the red folder news even, and then we've got the imbalance, 50% of it being tapped almost perfectly in line with the 61.8. And that's on the 30-minute time frame, and pretty much a similar thing happened right over here. This wasn't so much a trade that you was super clean and easy to take, but one thing a lot of people would have been caught out with was taking this sell right over here. Now, although this did give you a low to the downside and a lower high, it still would have given you a correct, that would have been a valid trade to take. But for you to hold this and continue and then take a loss, that's where you go wrong, because once you catch a low, when you see a low and a lower high, the opportunity, your objective over here is to try and equal this low right here, right? And that goes for any type of trade you're taking when it comes to a lower high, because you don't know whether or not it's going to break this level. And if it does, great, now that's bonus. But one thing you shouldn't be doing is taking a loss on this. And I remember a couple of my students, they took a couple break-even trades on this, but that is very good risk management, because a lot of traders will take a loss on that, expecting this to be a move to the downside right now, just because the market has reacted off this resistance level. This resistance level is just short-term. It's just a short-term obstruction to the higher time frame objective, and that's all it was. It's just a distraction for a lot of traders, thinking this is where now the market's going to fall. No, the market's just fulfilled one of the most cleanest pullbacks, and now it's ready to absolutely smash through all of them. So that's what I did right there. And then again, the price action over the course of, what was it, Monday, Tuesday. Okay, so over the course of yesterday and today, the market actually gave us this clean, again, Fibonacci long. Notice how I'm all clearly identifying higher highs and higher lows. Notice how they're really pulling back into the areas which make the most sense to me. Okay, and it's coming back and retesting previous levels of structure as well, and again then taking off from there, as opposed to the middle of the week where it was making nonsense over here, and it wasn't really making much sense, right? It wasn't giving you a clear direction, wasn't making clean higher highs and higher lows, but instead coming back in and just low volume and overall low probability. Now, how do you go about identifying this, and how do you go about seeing this in real time? Because it's all good at doing this in hindsight, but the answer to this question really comes from journaling and actually reviewing your trades after you've been in them, right? And one thing that has helped me is always keeping not just only going to a software like, there's TradeZeller out here, there's multiple softwares, Edgewonk, Excel you guys use, things like this. Although it is very good to go ahead and, use these softwares, I do also recommend you guys have, a template on TradingView where you just plot those trades that you have and you leave them on there. But then on your main chart, you kind of keep it completely blank. You don't, leave all your trades on there, because that can lead to a little bit of FOMO, but also just kind of leave you there just really contemplating and what's the word now, just sort of really just pondering over those trades and really just going and praising yourself for something that you may have taken or may not have taken, and just dwelling on it. Really dwelling is the word. So that's what you don't want to do. You just want to see the trade opportunity, take the trade idea, plot it on there, and just look at where it went from there, because that's what you're seeing on the trade, the same platform that you're doing the analysis on. That's what you want to be working with the most. But again, how do you identify these opportunities? You first of all need to understand which higher time frame structures or price action structure do you really resonate with. When the market is flying and it's making all-time highs like this and it's making small 5-minute 3-minute pullbacks, do you trade good then? Or do you trade better when the market is making deeper retracements and it's making clean higher highs and higher lows and reacting and bouncing between support and resistances? For me, it's that one. When the market is on the 4-hour and the daily, bouncing between, if I'll just show you an example right here, just turn off this for a second. Let's go to the daily. As you can see, this is the daily time frame. I made a lot of money trading within this range over here, right? And I literally didn't take any trades, or took very little trades during this bull run right here. Now, again, it's not the crypto market where you buy, it's better for the market. No, you can make money both ways in this. And for me and for my strategy and for my systems, where we're working with support and resistance, we're working with supply and demand, premium discounted ranges, we're working with structure, liquidity grabs, things like this. These tend to occur in ranges on the higher time frame, because on the smaller time frames there are clean trends to be working with, right? As you can see on the 30-minute time frame, you can see right there, just from the naked eye, just by glancing at it, the clean structure we're working with from this, right? You can just see opportunities after opportunities, and that is what I prefer to trade in. And again, you can only identify this once you have hundreds of trades backed up. So again, identify what it is on paper, just by looking at my trades, looking at my YouTube channel, looking at my previous trades, whatever I've done in the past, whatever I've reviewed. For example, you can look at mine, you can look at your own. Think about what makes more sense to you, number one, what suits your trading personality, and then go ahead and execute. That execution is only going to make you better. Not only mentally and psychologically are you going to be able to note things that you can't really write down, but also again writing down and taking a note of these are things that will definitely become more present to you because you're actually taking action in this, right? Don't overtrade, but also just simply take advantage of these opportunities where the market is just presenting the opportunity. Take action, take the trade, and overall you will just gather data. Once you gather that data, all I want you to do from that point onwards, and I mentioned it, I think it was last week, where I simply said, look at the winning trade that you have. Don't just look at that winning trade. Like for example, we did just over here. Let me just go back to the analysis. What I didn't do over here was I didn't just only look at the trades that worked, right? This trade over here, I didn't just talk about this. I talked about everything to the left of that. To the left is what builds up the price action to the right. So when you see the trades that we're taking on the right hand side, always go back at your own trades and don't just analyze that one trade. I want you to simply go back even for that week and explain to yourself. I want you, this is probably the best homework I can give you, and that is to almost give yourself not a full story or more of like a review. Yeah, a review would be the better word to use. And instead of just talking about the trade that you took in the entry, took, as a rejection candle on a resistance after it made a rejection from there, no. I want you to talk about the characteristics of price action and the behavior of price action, the structure of price for that week as it approached your area of interest, because that is what will build the confidence for your entry later down the line. So that is what will make you, shape you to be a better trader overall. And that's the understanding of the prior price action that built up to your levels of interest. And that is exactly how you go about identifying the good market conditions, taking advantage of them, and by staying out, the simple way to stay out of something is to focus on the thing that you know works well. So if you know taking trades in trending environments works well, don't think about what not to do, just think about to do that one thing. And if anything else presents itself, then you simply just ignore it. So that's the secret, and this is not always it's not always going to be a case of do X and then don't do Y. It's just about do X, do X, do X straight away, right? Just do the one thing that you're focusing on, and that automatically nullifies the opportunity of doing something else, right? So I hope that made sense. What I'm going to do is, because this video has been a little bit longer than I expected it to, is I'm going to just give you a few screenshots if I can of GU, EU and all these other pairs. But overall, what do I see from gold right now is the fact that it is making all-time highs, and very simply it's just to be patient and wait like we did, multiple times a few weeks ago. I don't lose absolutely nothing by waiting, because at the end of the day, it takes one trade to make, a lot of money, and it also takes one trade to lose a lot of money. So don't just rush into things. At the end of the day, when it goes up to all-time highs, it will always pull back and make some structure, and that's what we end up working with, right? Literally no data to the left, so this will present the data for us very soon, right? What goes up must have to come down. And again, that's pretty much it. I hope you guys found value in this video. Again, if you guys are interested in automating your funding challenges in the background, if you're very busy with your 9-to-5 life or whatever it is, if you guys want to have a consistent, passive, verified system to go ahead and trade for you, whether it's on a challenge account, a funded account, and we've had multiple payouts like I've shown you over here, FTMO payouts, any prop firm, any challenge, you guys can join the channel. I'll leave the link for this in the description. We are opening early access up for a few clients, a handful of them over the course of this week. Then we'll be closing that again and then making a launch very, very soon over the next few weeks. So if you guys are interested, go ahead and join that. And if you guys are interested in actually joining my academy, because today we had again another one of our traders get funded. As you can see right here, this is not me making anything up. It's yesterday, literally a few hours ago. Big thanks to Ads. Had got his course last week. Since then, I've been profitable. And as you can see, he's just literally taking advantage of the clean market conditions, as you just said right there. Gold been bullish past week, took full advantage of the market. And you guys can see that right there, right? Real honest testimonials, nothing to hide, a real trader, real results, real students. And that's it. We're just not pushing anything down you guys' throats. We're just letting the results speak for themselves. If you are serious about trading, if you are serious about making a living out of this, invest in education. What I'm providing here is real value. I'm talking that, I'm not hiding anything. I'm just giving you guys pure value, and I want you guys to take advantage of this. And let me know, when you try these little, when you apply this advice, let me know how it goes. I always like to hear you guys, success, and that is basically what motivates me to do these videos more and more. But that's been pretty much it from me now, guys. I hope you guys enjoyed this video. I'll catch you all out in the next one. Peace.